deliberations and the speed of a concrete solution is critical. The markets did not exactly plunge on the news of the hung parliament, but they did fall. The pound fell by nearly 2 cents against the dollar at one point today, and the FTSE is down 5.5% on the week. But this political dance is taking place amidst a growing financial meltdown in Europe. Our economics editor, Paul Mason, is here. How long before the markets decide that what's going on here is a real problem?
Well, what's happened, Kirsty, with the election results is that the two stories we've been reporting on, the European fiscal crisis and the UK election, have become one story. We are part of that crisis now, even though we're not part of the Eurozone, simply because investors are now worried about lending money to any government that doesn't look like it knows how to get its deficit down. We've not really even got a government. Let's look at how the markets reacted to the election result. This is the gilt market, and this blue line, if it goes up, it's bad because it implies the risk of lending to Alistair Darling is higher. Yesterday, on the left, that's election day, the Geiger counter's ticking. They wake up this morning, 8 o'clock, and it takes off. But it stops at 10:43 precisely. Why? Because Nick Clegg goes on the radio and offers the coalition. It falls back, it creeps up again as Gordon Brown makes the statement we heard earlier, and then it peaks and falls rapidly after David Cameron responds. So the market's there clearly responding to movements in politics.
Meanwhile, the global markets are being really knocked by what's happening in Europe. Why?
Well, let's look at the damage first of all. The stock markets in Frankfurt, in Milan, in Paris, down 3 to 5%. And then just look at these the shares of banks in Greece, in Portugal and in Spain. They are heading now back certainly in two out of those countries towards where they were right after the Lehman crisis. And that's because banks have to hold sovereign debt. People feel that money's going to be lost on sovereign debt. It means that this Greek crisis, the Portuguese crisis, edges over into the banking system. Now, this weekend, the European Central Bank, or the authorities somewhere, have to do the equivalent of taking that funnel in the Gulf of Mexico and dropping it onto the crisis, onto the seabed, and staunching the flow of panic and chaos. Now, they've been called upon to print money and buy the debt. That's quantitative easing. We've done it here. That would blow the European Central Bank's modus operandi apart. So what's being talked about now is a big ring-fenced loan. 600 billion euros is being talked about as early as this weekend. But they have to do something because it's week after week of crisis.
And what concretely does the UK government, whichever government that might be, have to do?
Well, remember before the election, all that long time ago, they wouldn't tell us what 4/5 of the cuts were going to be. Now, when they're sitting across the table, they have to at least tell each other what they might be because they can't negotiate. Is it going to be Trident? Is it going to be 20% VAT? Is it going to be the UK's first armoured division brought back from Germany and slimmed down, as the Tories briefed before the election? Interestingly, in these talks, the Tories sent their heaviest hitter on the economy, George Osborne. That signals they want to say to the Lib Dems, you accept our curve of deficit reduction, the fast, aggressive curve, because that's what's needed. The Lib Dems sent party strategists. Very interesting. So it just implies that the trade is going to have on the table is, you accept our deficit reduction plan, we give you some micro measures. It can't be anything else.
Paul Mason, thank you very much indeed. Well, hedge fund manager Hugh Hendry is here to give his views on things, and let's have a look at how the markets ended today. The FTSE 100 share index was down 138 points. In New York, the Dow Jones also closed down, and against the euro, the pound was down by nearly 1.5 cents. Against the dollar, pound was also down. So, Hugh Hendry, from your view, good news, bad news, coalition, possible talks. What does this do to the markets?
The markets have decided that it's bad news. It was an indulgent outcome. It was an outcome which was steadfast in refusing to acknowledge the need to take very difficult decisions.
So do you think the public got what it wanted then, or got what it deserves, I should say?
That's not for me to determine, but that certainly I think there is precedent with, if I could remove myself from the politics, there was the precedent in that one of the parties suggested rather vigorous cuts in government spending, and it did so during the conference season last year, and after doing so its opinion polls were obliterated, and then it stopped talking about cuts.
So in fact the party should have been talking austerity, austerity, austerity all the way from the conference, all the way through the election campaign.
What I'm saying is the electorate, again, were rather indulgent, and they believe in the notion. We're hearing a new lexicon, a lexicon of disbelief. Yeah, we're hearing the notion of progressive taxation. We believe we can suspend our difficulties by notions such as Robin Hood, fairy tales, fairy tales. This is a fairy tale election.
So it may be a fairy tale election, but actually it's the sting in the tail is that there has to be some kind of government at the end of it which can hold together. Well, the markets
it can't hold together. It can't hold together, right?
Well, that's a political judgment?
No, that is an economic judgment, because as the Bank of England governor reputedly said, that to take the cost out of government spending that is necessary, to control the deficit, would mean that whatever party endorsed it would be out of office for 20 years, right? There is no mandate.
Chalice, the idea that it's hospital
now you could get away with that if you had a very, very strong endorsement, if you had a very high majority. Without that, it's not going to happen.
We're in a situation where we've got 2 or 3 days perhaps on this deal. If this deal doesn't work, perhaps there's another period of negotiation, could be maybe well into a week, 10 days. How long will the markets thole this indecision?
You will have a coalition government, but the clock is ticking. It will expire. It will probably expire within a year. International events are overwhelming. This is a very parochial concern. I'm afraid Paul's fantasy, that silly chart with the gilt yield going up and down, that is fantasy. That is reflecting the economic crisis at the heart of Europe and the economic crisis which has emerged in the banking sector. I'm afraid, again, like in 2008, the banking sector is becoming insolvent.
Hugh Hendry, thank you very much indeed.